Good morning and welcome everyone to the Kendall Report. It is Tuesday, still working on the new format. Today we're going to focus in on some oil stocks. They're continuing to be hot. I thought I would cover a number of those in the second half of the show today. So just before we start to go through the preliminaries of what's in the pre-market, just make sure that you subscribe and hit that like button, and let's make this new format work really well. The likes are going to help a lot. So if you're watching, hit the like. Okay, folks. So the setup here right now, we got 10 years down a little bit. The futures are up 13 and a quarter on the S&P. NAS are up 74, up 0.67. And we're looking at the Russell right now. We're looking at 0.36 on the futures, up 0.55 on the cash right now. It's interesting because the TQs were the most volume yesterday, and they're continuing to be at the top of the volume list. 39 million traded already, so lots going on there as well. Just looking at the leader list in volume right now is kind of mixed. Nothing real substantial, but that kind of jumps out at me right now. The setup right now, it's all about the elections. Evidently, I learned this from watching Bloomberg this morning, that the markets like the basically a split government. So they don't like it when everybody's together. Although, anyway, we'll leave it at that, right? We're not going to get political or talk about the election, other than it does appear that there is an election bid here, and all of the metrics, and which I don't I'm not big on seasonals, and I'm not big on every year that this happens, that happens kind of stuff. I think everything is very unique, and sometimes that works. But if you're trading based on that stuff, you're fooling yourself from that standpoint. But the setup here is a fairly nice start to the day. We'll see how things go. There's really not a lot that is going to happen from the standpoint of the pre-market between now and then. We're really just looking at a mixed scene. Crude oil down after a fairly good day yesterday. We're looking at the VIX at 24. Just looking at a few things here. Bitcoin was down fairly big and is trying to stabilize here. And I didn't cover Bitcoin yesterday. I will today, and I didn't cover gold. So we'll get through all that. And so the setup for today's session is going to be, we're going to go through the normal cycle. First, I'm going to do the setups for the algos on all of the indexes and how they're looking as we come into this today. And then we'll go through the normal technical section from that standpoint. On the second section, we'll take a brief break for a couple of minutes, and then we'll come back and cover the oil stocks. I'll go through some specific stocks and how they're performing as a group as well. So, and then at the end, I'll cover Bitcoin at the end of the session. So make sure you keep me on the line here and get Bitcoin covered at the end. So make sure you comment. Anyway, like I said, not a lot going on. We're looking right now at S&P up Dow Jones up 109 here in the futures. S&P up 13.25. They're softening a little bit. We had a little spike in the 10-year a few minutes ago, but that's pulled back in already. So nothing really going on there. Like 418 on the 10, and we're looking at the Dow flat again, trying to call it back. It's been weak for a few days, so maybe that'll come back. One real quick mention there. Overnight, there was the Japan was actually intervening again in the yen. It seems that they're pretty much stuck on doing that every day. It doesn't look like we're going to get out of that at any time. A couple things I'll go ahead and cover pre-market at about 4 minutes from now. We'll take a little mini break, and then we'll come back live for the opening bell. Yeah, I think just another comment so we can save this. Won't have to go through some of these things, but this whole idea that the markets like a split government, maybe there's some truth to that, but maybe there's some truth that things are looking for a change up. But I'm not sure just by putting some of these people changing around the mix of things and the votes and all that, that there's one party's that much different than the others. There might be a little bit of contrast there, but it's very stark. It's a different shade of gray, pun intended. Okay, so yeah, I think that'll do it for right now. I'll come back in. Like I said, we'll take a couple minute break. I'll get everything set up here, ready to go, and we'll roll into. I'll come back and we'll go into our level 2 screen on the S&P, and we'll watch some of the aspects for the first few minutes, and then we'll get into the algos and et cetera. So let's go ahead and just take a brief break at this time. All right, folks, I'll be right back. Okay, folks, I am back. I'm excited about the opening. I talked to you about this yesterday. This is one of the most exciting times, hearing that opening bell. So we are about 4 minutes out. So just looking at some of your comments, and I was getting a drink. Oh, you can't see it. It's green screen duty, but it is Runa, which is your best drink for energy you can get. And so it was close. No whiskey, though. Appreciate that comment. So, yeah, I love some of your comments here. I think we're seeing a little bit of selling as we come in right now, which is typical. And something I pointed out yesterday on the screen just next to me here, the volume, we start to get a lot of erratic volume that starts to come in off the opening. It takes about the better part about 35, 40 minutes for the markets to stabilize here. So let's, yeah, we're still about, right now, we're about 2.5 minutes out from the opening. Yeah, I'm just looking at, yeah, I am getting all hyped up. I appreciate it. Looking at some comments here. Yeah, I am in Arizona. That is true. The whole country's focused on us. It's kind of interesting. I will be going to the polls later this afternoon and doing my duty here. Just looking at some of your comments here, pre-market. Yeah, Pamela, thank you. I'm quite active for my age. You'll see. Hopefully, you get lucky enough to be my age. I have a lot of friends that aren't here anymore. I lost 4 good buddies last year. So yeah, it gets kind of scary when you get old, but you keep showing up. Yeah, the opening bell automatically is built into system, so we're getting pretty close right now to the opening bell. So we'll see the activity pick up substantially on the screen. Just above me is the yeah, just want to move that over. Okay, yeah, so just above me is all of the time and sales, as well as the level 2 on the far left. So keep that in mind. And we're about to get ready to go here, folks. Getting some blocks of selling coming in here right before the open. All right, there's the opening bell, and we are off. So activity will start to pick up. You can see this first volume meter over here where my cursor is. It's just going to grow substantially. We're going to start to see a lot of activity. One of the things I look for every day when we set up, and I'll go through the quick setup here, we'll go through the algos here and what the expectations. If you recall yesterday's open, we had a stable to a bias to the upside. Later in the session and the live room, we did see the substantial rally set up and go to the above the 38 handle. We're now 38.22 printing. So we're seeing some pretty good downside. If you notice on the far left-hand side of the screen, we've got some pretty decent selling coming in here at the moment. And we're trading through STX on both the 5-minute and the 1, and we're seeing that volume spike up. So we'll watch this for just a couple of minutes just to get a feel for the open. Yeah, just somebody, just real quick while we're looking at watching this first few minutes of trade, we're starting to get a little bit of a bid coming back in here. There is a way to kind of get rid of most of the delay in this broadcast. If you scrub it backwards and then scrub it all the way forward, you should be pretty close to real time. You won't have the lag. I don't set the lag. It's a YouTube situation. So if you do that, you can do that as well. I think somebody also showed you that you could do it 2 times on these settings and you can actually get this up to real time. Yeah, I don't know. I don't remember a dump yesterday. A little bit of a selling, but pretty much we finished near the highs of the session. So anyway, yeah, we're still seeing the selling coming in here, folks. This first few minutes, plenty of selling. We're printing down to 15, and we were as the high here earlier. We printed up to 34, so we pulled back pretty good. This first minute bar, this is very typical. So I'm going to hang with it. It's only 2 minutes in. Let's just hang with this and watch how some of the setups are starting to form here off of the initial opening. I think if you're trading the markets, especially if you're day trading, you want to get a feel for how the market's going to set up, and especially in that, I would say, first 15, 20 minutes. It's one of my favorite times to be involved in the markets. No problem, Michael. All right, so let's go ahead and let's start to dig through some of the patterns here, and let me just get some things set up for you. And one of the patterns I really feel strongly about is using the hourly charts to set this up from all the markets. So we'll start with the S&P here, and we'll move through. Let me go full screen here so you can see this. We'll move through all of what the algos are expecting, and right now on the S&P, this is the hourly S&P. We're looking like we're going to see a little stability, but in the next 2 to 3 hours, we should start to see markets decline, probably heading back towards the 38 handle, possibly 37.95. You guys could have this stuff on your desktop. Just get these indicators, and you could have all this. But the algos are suggesting for basically a stable sideways market. But I think the downside here is looking at the 40 period moving average. I use simple averages, don't use exponential. There's a reason for that. And at some stage as we go through the new show, there is going to be some, on occasion, there's going to be some educational type things as well that happens on this new channel. So the whole plan is that at the break, after the halftime break, we'll go through and we'll have different segments that we cover every week and every day. So remember, Thursday is commodities. Tomorrow is going to be kind of a macro view, possibility of a interview type situation and interaction with another person. We'll see. I'm working on a couple guests, and most of that will probably happen in the weeks to come. But let's go to the NASDAQ here. We should have similar type patterns. We do. The algos are suggesting that the 21 period moving average is going to be fairly solid. We're trading down into support right now, 11,018. And I'll go through the market grid numbers here in just a few minutes. But yeah, everything's kind of stable to down. Extreme support right now is right at the 40-hour moving average, which is the 10,953. That's the extreme. And we're looking at 10,018 is actually right where the last defense. If we break 018, then we'll probably see the 40-period moving average. Let's go over to RTY. It's already breaking through its 40. It actually looks much weaker. It looks like we're going to roll over just a little bit here in the next few hours. All the algos are suggesting that we're going to see some weaker patterns in the next 2-3 hours. And these things update every hour as the actuals come, but they're very accurate in determining this at least initial movement on the downside. Yeah, so we have just a minute. I have about 4 minutes. I got to kick into the technicals. I see a really, really good question. Why do I use simple moving averages? The simple moving averages, there's no reason to change the math. Today's value is not more important than the other day's value. So there's no reason to out the whole theory in exponential and weighted averages is that somehow today means more than yesterday. And it also has to do with a technique and a philosophy called WaveTech, which is all my products are using WaveTech, which is the study of moving averages and understanding the probability map around moving averages. Unfortunately, people just use moving averages blindly and don't understand. The PPMs actually go through and show you what the probabilities are, whether the value of the moving average is going to hold above or below or what's likely to happen. And that probability map is all the difference in the world. Those of you that have been in the live room or in the live room now, you know you can comment on the effects of that. So, but that's why it's simple averages. So let's go ahead and get into the daily review of all of the technicals. I'm going to go straight through on a run, and we'll take a break when I finish. I'm going to be covering everything up to all the way through gold. So let's go ahead and get into it. Okay, first we'll go through the S&P. As I've been talking about, we're still have some weaker expectations here. This is the daily. There's some new Fibonacci downside targets that have just come in recently, and they're suggesting potential down to 3610 here. I don't see that happening at this moment, but we are seeing the PPMs remaining in a upward slope here. So a lot of times we'll get these Fibonacci targets, but they don't really mean a lot from the standpoint of whether we're going to reach them or not, based on the configuration here on the PPMs. PPMs suggest that we still have a little downward pressure, some sideways for another couple of days. We've got stability in the 21 period moving average. 3760 is going to be your major support here in this pattern. And then it will take a break above it'll take a break above about 3875 to really get things going. 3906 is still a major resistance point, and we could get up there. What's interesting here is that PPM 3 is actually starting to move up. It says that the 40 period moving average, which is currently at 3760, will be major support, as I just mentioned again, and that's going to start moving up. So that means that all three of the moving averages have high probabilities of moving up, which means we're going to set up a trend, and I've been talking about this for a while. We're probably going to see us move toward the 200-day moving average before this party is over. Next, we'll cover the NASDAQ. NASDAQ, similar patterns here as far as the algos go. They're expecting, in fact, on NASDAQ, it's saying that this is the final part of this low, and we should start to see some improvement. We have a little bit of upside. 11,600 on the upside is a possibility, so that's a pretty decent rally, 600 points on the upside. I suspect over the next several days, that's what we're going to see. We'll see some positive movement here. We came right into the Fibonacci targets on the downside. Now we're seeing the algos trying to improve, just like in the S&P. Cover the Russell next. The Russell has the same, a bit weaker profile. We've already hit the 200-day. As I mentioned, as I was talking about last week, we are seeing this market move up into the 200-day. Now what we're looking at is the PPM1 is trying to fade. The algo is suggesting we're going to get in a downtrend, and the PPM2 and 3 are actually showing stability. So typically when we get that, we get a moving average set up from the standpoint where we trade in between moving averages, with the low end being 1758, last trade right now 1806. So 1758 on the downside, 1818 on the upside. We're just likely to stay right in that range. So we're trading in those bounds at the moment. I don't see us getting out of that. And at the end of the week, I'll go through the setups as we come into Monday, since we're not doing a Sunday night video anymore. Next, we'll go to the 10-year. I've been talking a lot about this. We still have upward targets, 467 on the upside. Algo suggests that we're trying to top out right here, and that we're likely to hold some of the support, but we should stay above 392 is extreme, and around 404 is support. So 404 to 392 is extreme. As I mentioned, I'm going to flip this over to a weekly chart here, just so we can see the market grid. And the market grid suggests right now that we're looking at 424, 434 as R1, R2 on the downside, S1 407, and then 397 is the expectation on the weekly chart from the standpoint of what's going on here. We still have this big uptrend, and the 10-period moving average right now is at 3.87, so that's going to be your extreme, but I'm going to call it 392 from this standpoint. All right, we'll cover crude next. This pattern that has been unfolding here in crude for a while, this is the weekly pattern. I mentioned this several times. We get targets at 108. The algos are suggesting a continuing for the next couple of weeks of this uptrend that is starting to form after this little right shoulder. And what's happening, I'll draw this in real quick so you can see exactly what's going on here. Bear with me 1 second, trying to get to a tool. What I'm doing is I'm going to draw in this pattern that is being picked up by the WaveTech pattern finder there's a little pattern right here. There's a 1, 2, and this 3, that's where these projections are coming from. So the WaveTech Fibonacci projection tool is projecting that pattern to the upside. Now, these algos here are starting to show that there is some upside here. The one thing that is not confirming this ppm 3 down at the bottom here is actually suggesting that this level right here, the 40 period moving average 98.93 is going to be pretty substantial resistance, at least for another couple weeks. So while this pattern is being projected, doesn't mean it's going to be hit right away. What it does mean is that the configuration is suggesting that we're going to go there. That would be basically a retest of some of these highs in here that we made earlier back in June. And that's really what's being set up here. The min is 107, and then the potential is getting up to this 118 level, which would be that retest. But the expectations here by the algos is that we're going to stay positive on the short, but that 40 period moving average at 90, we'll call it 99, 99 to 100, we'll just round off here, is going to be substantial resistance. We'll probably see some trading around there, some backfilling. We're not just going to run right up to those numbers, but it does look like the general trend here on a weekly basis is just that. Let's go ahead and just bring up the daily here real quick and look at the micro trend. Daily suggesting that we're going to come back into these moving averages, probably set in. I've been talking about it. It's broken record. 86.92 is where this market is locked into. We've had this upward bias for several weeks now, and I think we get a consolidation. You can even see here the 200-day moving average is 98.76, which is very similar to that 40 period on the weekly we were just looking at. So that's going to be major resistance there. We also have Fibonacci projections right to that level right now, which is right at 109, 98.69 is fib target 1. Fib target 2, that's up here, is at 105.33, and fib target 3 is at the 109.44. So this 200-day is going to be a substantial number from that standpoint. So I don't see us getting above there. That's where I'm coming up with it. Basically, the whole 86.92, the extreme is 98 in this pattern. All right, let's go to gold. This is the daily. I've been talking about this for a while. The algos on the gold suggest that we're going to get more upside on gold. These fib targets were suggesting we could get as high as 1808 level, which is the 200-day. We're going to go to the weekly analysis, but this is very strong look here. We're just continuing to see that the market is starting to turn up here. Let's go to the weekly so we can get a better feel for that. So here's the weekly algos here. They're also suggesting, I've been talking about this for a while, they've moderated a little bit. They were looking very, very bullish, but it does suggest right now, ppm 1 and the algo is suggesting we're going to get the trend mode on the upside on an intermediate basis. So if that happens, it means we're going to have to start trading above this 10 period moving average, 1675. My range is around right where we are here, 1675 to 1720. We get up here to the 21 week moving average. That's where that's going to come in at, and we're looking at the pattern of the ppm 2 is is actually, it's not as bullish, but what it does, it suggests that we're going to flatten off here. It also suggests that we're going to trade through the first and second derivative. And I'll just take a minute out to tell you what that really means. Is when you see these crosses over here, it's interesting because we got a crossover at the same time on both the first and second derivative. That's the two lines on each one of these indicators. When we get that, that means that there's over a 60% probability when that happens that we'll go above that moving average. And when we get to a level of plus 0.25, that's trend mode, that suggests that will be a new trend, and we'll start to trend to the upside, and we'll stay above those values as we go forward. What happening here on the algo is suggesting that in the next 2 weeks, we're going to actually penetrate the second derivative on the PPM2, which suggests that we'll penetrate through the 21 period moving average 1723. So we're trading right now at 1680. What that's really telling you is there's a $40+ rally yet in gold over the next 2 weeks that should challenge that value. And it also suggests that there's a potential to rise above it. We have the 200-week moving average in there as well. And that number is 1739. That's also going to be kind of a cluster resistance point between 1725 and 1739. All right, I'll come back on screen here for a couple of minutes, just kind of summarizing what's going on. Looking at markets are kind of stabilizing here at the moment, and what we're looking at is that the patterns that are starting to set up here are getting reasonable interest in the 1 minute. This chart, I have a 1 minute chart over here on a 5-minute chart on the far right-hand side of the S&P. You see it formed a nice bottom. It's got the Wavtech webs on here, and we're starting to see some bottoming process happen here. Like I said, the algos, when we started just a little bit ago, were suggesting that there's good support on the market. We're going to be sideways and a little bit of potential weakness, but really what it is a trading range, and the numbers that I set up earlier are likely to hold in place. Let's just go actually over there for just for a second, just to get the setup there. We'll go back to, I just want to take a quick look at the ES, see what's changed since we looked at it last time. And let's get over to the hourly chart here. Yeah, so what we're seeing here, like I said, stable, looks like some potential downside later in the session. So maybe we back off, maybe depending on what kind of news is going on around here right now. But it looks at the moment that we're going to continue to stay above these moving averages. That's what the algos are telling us. That's what the PPMs are telling us, that we're going to stay right here, as I mentioned earlier. 37.14 is the extreme. We actually printed down to 1075, and that was just right at I'm just looking at the numbers here, 38.14 on the hourly was the STX. We printed through that. We're back in the middle of the range again, trading back at 24. So quick little blip underneath there and then back above the markets. So here's the plan, folks. I'm going to go ahead and take an early break here. We're going to go break for about 2.5 minutes or so. And then what we'll do is I'll come back. We're going to go through some oil stocks. And then ultimately at the end, we'll cover the Bitcoin. But I think there's some interesting things that I want to cover. I also haven't covered the database yet, which I'll do when we come back as well. So let's take a quick break. I'll be back with you here in just a few minutes. Okay, folks, just getting some things set up here. Got a couple of things that I want to show to you. I'm anxious about this because one of the things that we did in our live trading room in January, but if you folks have been watching this channel for a while, you know back in November, December of 2020, I was screaming energy and financials. The financials did really good in 21. There was a breaking point there. And then oil has continued to be a really strong performer. We all know that now because we've lived through it. But that was also through the software, our algos, our trading models, and all the things that we do and process was actually telling us this way back in November of 2020. It's hard to believe it's been that long, but we're looking at two years ago. And I'll show you some performance here on what and then I want to break this down from that standpoint. Just making sure. Yeah, this is the energy hack, and what you're seeing here in this graph right here on the right, this is from December 2020, the performance from December 2020 to currently. Right now, 165% return. This is on what we do is we take an ETF, and I'll be talking about this on the channel, so I'll go into this a little bit today. And at the end after I cover this, I'll go into the database, we'll do Bitcoin, and we'll basically finish the show off for today. But this is interesting, and I'm going to go through some individual stocks. So I'm going to spend a little bit of time here with you today. But this is the performance, and what we did was we took and researched all the stocks that worked the best in our trading models, and we put them into a portfolio. Now, this portfolio manager, portfolio expert, actually goes in and rebalances, does all the mixing of the trade. It's basically my original product that I started in 1998 was called the Virtual Portfolio Manager. And basically what I wanted to do was to automate the whole process of portfolio management. It's now available to anybody. And for years, it was on institutional only. Still do a lot of institutional business. We help them to guide through some pretty rough times like this year. Those folks that are in there are probably average down maybe 6%, not 24, not 30, not any of these things. 60-40 portfolio has been dead for a long time. But let's go back to this factor here. Let's just go full screen so you can see this. But this is the performance on a week-to-week basis going all the way back. During that same time, what we've been seeing, and the blue line down in the bottom is the S&P. And so you can see it's up about 10%, while this portfolio is up 100%. Let's just go to year-to-date here. Let's take a look at that. And the year-to-date performance, and we're going to go through all the constituents that are in here real quick, and then we'll talk about some of these individual stocks. I know a lot of you are actually owning some of these. There's people in our live room and our clients, both retail and institutional, that have these trades on. So I want to take the opportunity. On Tuesdays, we're going to be doing some sort of review of stocks and everything every week going forward. So this platform right here is what we're seeing is that we're up 42.5% in 2022. This is year to date, okay? S&P minus 20. So that's like amazing. That's triple the performance if you want to look at it that way. And the point of showing you this is what happens when you start to bring in the pattern of looking at individual stocks. So I'm not sure. I'm hoping that this is able to see. You guys need to comment if you can see this pretty good. If this is too small, or if you can read this number. I'm going to attempt. I have a Zoom screen. I'm going to try to zoom in on this. One of the issues with the software platform that I'm streaming with Yeah, that's what I figured. Okay, just hang with me 1 second. Let's see if I can get this. That should be a lot better. How's that? So the pattern that what I want to show you is every stock that is in this portfolio is green. Yeah, I'll have to find that out, how to use the YouTube app. Oh, I see on your guys' side, you may be able to zoom in. So we all have more to learn on using these platforms. But what I want to show you here is I'm just going to broaden this out. I know it's still pretty small, but this should be helpful anyway from the standpoint. What I want to show you is, matter of fact, I just have to adjust something. I'm sorry, folks. This was impromptu here. There we go. So at least you can see what's going on at the moment. It's kind of a fixed. I'm trying to fix this. Bear with me. There we go. That's a little better. So here's the what I want to show you, and I'll go through and I'm going to bring up our normal platform from the standpoint of going to TradeStation to take a look at some of these stocks. But what I want to show you is that the entry date here, I'm going to sort this by entry date, that some of these stocks have come in as late as 11/7, but this is the block right down here. And I'm just going to highlight everything that came in between 10/4 and this block right here, all came in. You see the entry date 10/4. Look at some of these returns. This is since for 1 month. We're looking at 19, 20, 30% returns. These were signals that came in on 10/4. Above that 11/7, we're going to go. This was a block that came in on the 7th, which was yesterday, okay? And some of these have even got some pretty decent returns. And I'm going to sort this one more way, and then we're going to go through these individual stocks, and we'll take a look at what's going on here. But let's take a look at the trading model. So this right here, Schlumberger down to, these are all weekly trades that are on right here. And these have been on, came on some since Valero Energy came on in January 3rd of this year. So basically first trading day of the year, we bought Valero up 78%, ConocoPhillips. But this has been the place to be by far, and we all know this. And what the beauty of all this goes. Let me go back to full screen here. Yeah, so let's the beauty of looking at this. I'm going to go through these individual stocks here and try to get through this in the next 10 minutes, and then we'll finish with the database and Bitcoin, as I said. But the reason why I'm showing you this is that these are times when the stocks were coming into play, the trends were beginning, and this is everything that you see on this channel is circumvented around this. This is what our institutional clients do. Those of you that are retail clients that are now using PX or the WaveTech software, this is what we're providing. But the reason why I'm focusing on this was a set of stocks that were perceived to do a good job and didn't know. If you go back to November of 2020, what I was getting was in our database, we got our sectors were starting to buy. 2 sectors coming out of the pandemic. These really were featured sectors, were the financial and on the oils. And the oil just keeps, I mean, it's the gift that keeps giving. It just keeps going and going and going. And it seems like the more that these folks talk down, try to attack the fossil industry, the better it does. It's so ironic on how the world works sometimes. So let's do this. I'm going to take this off screen, and what I'm going to do here is I'm going to move this to another monitor, and just so I can get going through some of the stocks. So let's come over here and let's start to go through some of these stocks. We're going to do daily, weekly. I'm going to go as fast as I can just to talk about what's going on with these symbols. So this is Schlumberger. This market stock just keeps going up here. You can see all the angle of attack. If I do the models on here, we were buying this thing down here, and this was, like I said, just in October. This is just an amazing rally. And, I talked about the XLE. I've covered it on the channel for a number of times here as we go back, and we just continue to see these stocks just come back in rotation. I remember back in late September, early October, I was saying, we're starting to get a rotation back into these stocks. I didn't really focus on it. And the way that I was running the channel before, never had an opportunity to talk to you folks like this before. So now we're going through a lot of the elements of that you need to do to manage your portfolios, but look at some of these stocks. So let's just do an analysis as if we don't own it. And the stock on a daily basis is actually starting to fade. So we can go over and throw the algos on it, and we're gonna go back and forth between the platform here. What's happening with Schlumberger, as I said, on a daily basis, this is hourly. Let me get it over to daily. We're seeing it really starting to roll over, and we're starting to see some weakness come in. So if you're in Schlumberger, we're probably looking at high values here. If you just want to be a long-term holder, maybe you buy some puts against it, sell some calls, do some covered writes, something like that from that standpoint. But it looks like the algos are suggesting that we're at least going to come back into around the 48 handle. We're 54. If we don't hold that, we couldn't get as low as 44 on that. Let's go over to the weekly. Like I said, I'm just going to keep going as fast as I can. Weekly, same kind of scenario. We're starting to see where these markets are starting to at least get to an extreme here, where we're likely to see the market starting to stall here. So some of these oil stocks, I went through the oil just a few minutes ago, and I was showing you that there's targets for 107, but I also made it clear that right at 98 is major resistance. These stocks are going to make money like crazy, literally anything over $75. So crude could take a hit. There'll probably be some market sentiment hit that happens on some of these stocks, but you're going to see them pull back. But longer term, they're going to actually be in good shape as long as we stay above 75. What's going to get crude under 75? I'm not sure. Certainly not the SPR. They have tapped that puppy out. There is literally not too many more barrels that can be released. And by the way, they not only did they release oil to try to get prices down, but they're actually selling the oil to actually raise money for doing roads and all that stuff. That supply was never meant for this particular purpose. And now if we do print 108 or we go higher, these guys have bought so low, and they're going to have to buy high to refill that SPR. So guess what? No matter what happens from this point, these companies are going to do pretty good. So let's keep going down the list here, and so I can get to some other numbers here. So let's go. Let's look at Valero. I'm not sure how many of these I'm going to get through. I've got roughly about 6 more minutes I can spend on this, but I want you guys to get a flavor. So here's Valero, same thing. Everything's saying we are peaking out here for the moment, and that these stocks are going to flatten out. If we look at what's happened over the last several months, as we've really been in a big trading range, we got up to 146, and now we traded here back to the 133 level, 131, 133. So we're kind of right shoulder, but really what we're getting is just a high level consolidation, and the algos are suggesting that we're actually going to get into a fairly big downtrend, and this in the next several weeks. So this is the numbers to watch, and I would be like on Valero's been a long-term hold. You can see we were buying this thing way back here in on this breakout. As like I said, on a weekly basis, we're up 75%. So we're a lot closer on all of these signals here to actually being in a mode to closer to selling this stock than buying it on a long term, especially stocks like Valero and some of these that have been the long term holds in the pattern. So let's just kind of keep going through a couple of these, and almost all of them have moved pretty good. Let's take I just want to look at something like a BKR, Baker Hughes. And the reason why I want to look at this is a little, we've looked at a couple things that are already topped out and are starting to show that they're stalling. That was Valero, and so we're looking now at Baker Hughes. Baker Hughes is a newer trade. This is a trade that came on 11/7. So this was a recent trade. We're seeing some nice movement here, and some of the patterns that we're seeing. You see that the algos are still suggesting we're going to stay in trend mode, a big trend mode. So the 10-period moving average is going to start to rise up. And what we're going to see, let me draw in something very quickly here from the standpoint of what's likely to happen here. And so this is the 10-period moving average. What the algos are suggesting is that the moving averages, I'm just going to draw in, this is the 21, and then we've got the 40 overhead here. So market's likely to get into really a kind of a zigzag formation in here, and then I suspect that we have some higher prices going on in the future from that standpoint. But this is a really good pattern to look at, especially if we go and take a look at this is the weekly configuration. If we go to the daily pattern, this is where a lot of these short-term patterns were picked up in here. This is something that has not been released to the public yet. This is the STX buy signal. We got the last STX buy signal right at the lows here, and right to the 200-day moving average. So this looks like we're getting very stretched out. The algos are suggesting once again that just about all of these patterns that I'm showing you right now, folks, they're really starting to top out. So it's been a great run. Like I said, our portfolio's up 42% on the year. I tried to convince a bunch of our institutional clients to get somewhat radical as they could and make the biggest bet that they could just on the oils. Because of compliance and things like that, there's only so far they can go, and some of them actually I was able to push them far as they could go, or they were willing to go, and they're pretty grateful because sometimes in some of their cases, their portfolios, their customers are maybe negative or slightly positive 2 or 3% because of it. If they could have pushed it all in, like I would, and not being in a compliance world, then they'd be up, 30, 40+%. But that's not something I can do. You folks, individuals, can actually do that. You can make that decision since you're your own fiduciary. But I just wanted to go through this. I wish there was time. It would probably take us the better part of an hour or something. So I would just do me a favor and comment if you'd like to see like a super in-depth view of doing an ETF hack or something like that, if you'd be interested in that, let's see how many comments I can get for that in itself. So let's go ahead, and I'm going to get set up here for the database, and we'll go ahead and go through the VPM database and have a few minutes left for comments before we end today's session. All right, evidently I messed up my setup when I was playing with the screen earlier. But anyway, let me just show you what's going on here. You really can't see the numbers. Let me go full screen so you can. They're pretty small here, but basically 43.56% bullish. We did have 468 buys, 161 sells. So there's still a positive rotation going on. We're staying above 42%. So this market is looking fairly good from that standpoint, and we're really looking at continuation of this traction that we've got coming off of these lows at 35.02. And I just want to say that really what's going on here from a database standpoint, from a market structure standpoint, everybody back a few weeks, and I suggested that you should be fairly cautious about getting too negative. We had that little sell-off last week, and everybody was negative. We're going to make new lows. You're wrong, Kendall. All that stuff. So be very careful. This database is very, very reliable on from the standpoint of the number of symbols. So we have right now 6,952 symbols that are long. And typically when we get to at least this level, we're just about half of the universe of the world, which is quite in our database, it encompasses just about everything. These are mutual funds, ETFs, and individual stocks that we're talking about. So when you start to get baskets and all the sectors also rotating, I've got it on screen. I know it's small. I'll just tell you what's going on here. But we've got a bunch of sectors right now. We have 3 sectors of flat: basic materials, service, and technology rolled over. Surprise, that's neutral with all the big tech stocks have been hit. But on the positive side, we got capital goods, conglomerates, consumer cyclical, energy, which is up 16% in 25 days on an index basis. This is short term. That's a crazy number and a composite from that standpoint. Because if I go to what those represent, if we come over here for a second, I just want to go over and take a look at the sectors. I just want to go to give me just 1 second here, folks. So when we go into, I want to see how many stocks are in energy to make my point here. There's 147 symbols in our energy sector. There's oil and gas integrated, oil and gas operations, and oil well services. All the buttons, there's a round green plus sign here. All of these are right now are long, and we're looking at oil and gas integrated up 20%. Up 24% on oil well services. So this is just, these are big numbers here. And typically, and I've talked about this before, oil and gas integrated will hold for about 25, for about 50 days. We're about halfway through that. The others hold 31 and 35. And what that really is the average holding. So we run on our models on all of the positive and composite of when we get a buy and a sell. We track what the average holding period is. We track what the expectation is. Otherwise, how much does that particular symbol make at any given time as well? And I'll just pop that up. Typically 49 days. The average profit on the index is 7%. The standard DEV is 13 on that particular symbol. And what's amazing about that, that's what I was just telling you, we're up 20. So it's 3 times the normal. That's how strong this market is. So let's go ahead and let's do Bitcoin, and I'll have some closing comments for you. So here we are at Bitcoin, a big hit on Bitcoin for sure. I had talked about a couple things here. This is the daily. I want to bring up the weekly because this is something I was talking about the other night. And I was warning that what we're seeing here on the algorithms is a complete collapse in Bitcoin, and the potential is down to at least around 10,000. And what we're seeing here, you can see, I'll just blow this pattern up so you can see it. We're seeing the algos suggesting that we're getting to some crazy numbers here in the next couple of weeks of a ppm down in the 5+% range, which means we're declining. That the moving average is going down 5% per day. So we're seeing that market starting to fail. And as I've talked about many times, the key levels on Bitcoin, 18.5, 18,200. We break through that, then it's Katie bar the door. You're going to be in big trouble here. There's just nothing going on other than this downward pressure finally came in. We traded right into some of these numbers, into that 21.4 number I was talking about a couple of weeks ago, and we just got rejected from there too, and it's just not. Yeah, that's pretty much it. So let's go ahead and I'll sign out here. We're at the end of the show. Hopefully, you got a lot out of some of those oil stocks. Trying to cover a lot, just really compressed time. I would love to be able to do this for like 3 hours, but it just isn't possible. So I do enjoy this new show, this new format and everything. And just in conclusion, like I said, it looks to me the S&P is rebounding back up. We're at 35. We traded down to 14, 20 handle run. So we're just looking at those support levels holding, and there's going to be a decent bid in here. NASDAQ up 0.71 now. And looking again, TQs are right on the top, 67 million traded. Tesla at what the next big number down. It's interesting. The SQs are in the top 5 here. TQs 67 million, SQs 25, and then we get down to all the usuals. NEOs continuing to be kind of an interesting stock here as well. So I'll just bring up TQ here. Starting to, this is a weekly. Let me move this over to a daily real quick here. You can't see it, so let me go over there just so you can see that real quick. So yeah, so we're looking at TQ setting here, trying to set up some bottoms, and we're looking at Tesla still plummeting down another 4%. Not good. There's some pretty big potentials down to around 178, 175 on Tesla. This thing's in big trouble. And meanwhile, what would happen if if Tesla wasn't plummeting And we do have a little bit of a bid in Apple here earlier. Now we're starting to fade again already. So Apple's been under pressure, all of these things. In spite of that, we're seeing the market indices actually stay in a fairly stable mode. So as we look forward, like I said, we traded substantially higher, making a new high on the session here on the S&P. It's in the far right-hand corner. And meanwhile, we're seeing the yields start to decline again back to 415. And like I said, I think 10 years locked in a sideways range. So everybody wants to be bullish today. The algos are all over these election headlines. So as we go through the session, it's going to get more interesting. Folks, I really appreciate you coming in on some of this, coming in on my new daily show. And please tell your friends. Let's get the viewership up and see if we can get some things going. Please comment on what you like, what you don't like, so I can formulate exactly a good program that you're going to want to watch every day. Anyway, folks, thanks again. We'll see you tomorrow, same time, and looking forward to it. Have a great day trading. Yeah, shout out to Key here. I think that's a good idea. If you would be interested in being a moderator on this channel, send an email to info@kendallreport.com. Yeah, I was so busy going through the channel, I didn't see that bot that showed up. I apologize. In fact, you always know you're doing a good job when the bots show up. Remember, folks, tomorrow's going to be macro view and some other elements. They have a surprise for you. I'll let you know. Yeah, the indicators are for TradingView only right now.